Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. The title of this video is The Power of Elliott Wave Trading, Part 2. In this video, we're going to discuss how we can forecast the fifth Elliott Wave, alright? How can we know the end of the fifth Elliott wave? How do we know that the fifth Elliott wave is completed? How do we know that the motive wave is completed? Or how can we forecast the fifth wave? What should we look for? Okay, so this is what we're going to discuss in this video to give you more power, okay, to trade the wave principle. Now, quickly to go back to what we have discussed in the first part of this video, the power of Elliott wave trading part 1. We were telling traders that okay, the alternance between the second wave and the fourth wave. If the second wave is very long, talking about the time period it takes for the second wave to be completed, we can anticipate that the fourth wave will take okay, a shorter period of time to be completed. Well, as you can see here, we are looking at Pupfizia, okay. Hope my pronunciation is correct. The epic is PFE, Papa Foxtrot Echo Pupfizia. Difficult name to pronounce. And you can see here that it took this stock more than 2 years to complete the second wave. This section here, from here to here, that's the second wave for Pupfizia. But as you can see, because it takes so long for the second wave to be completed, we can anticipate that the fourth wave, this section here, will take less than 2 years to be completed. As you can see, we are on the monthly chart. How many months? 1, 2, 3, 4, 5, 6, 6 months. All right, took it 6 months to be completed, while the second wave took 2 years to be completed. Another thing that I've said to traders in the first part of the video, if the second wave is a complex wave, there is a high chance that the fourth wave will be a normal wave. Okay, all right. If the second wave is very, very volatile, okay, there is a high chance that the fourth wave will be less volatile. All right, this is what we call the alternance between the second wave and the fourth wave. In this video, we're going to pay our attention, focus on the fifth wave. I want you to pay attention carefully. If there's something you do not understand, replay the video, be patient, okay, and follow us. We recommend that trader watch the full length for this video, because if you watch it halfway, you see part of it, okay? You only know part of it, okay? I'm going to share with you when it comes to Elliott wave. I want to share with traders. I don't hide anything. I share everything when clearly, without no secret. I have no secret when it comes to Elliott wave. I share everything with traders, okay? I don't want to remove this line on my chart, okay? So my apology to traders, okay? Now, how do we forecast the first wave? So I'm going to start drawing lines here. How do we really do? So there was a consolidation, and then we have the first wave. Trader, feel free to disagree with my wave counts. As always, when traders say, no, Joe, this is not the first wave, my reply is always, this is my wave count. All right? The most important thing is to trade in the direction of the trend. All right? That's the key point. You can be wrong when you are counting your wave, but if you are right, okay, which means you follow the market pattern, the price going up, you are buying, though your wave count is wrong, you can make excellent decision. All right, that's the key point I want you to remember. Another thing I need to mention in this video is that I'll remove at least this one here. The wave trading is not a science, a guidelines. I say this 100 times, and I'm saying it again, because some traders are looking for some magic formula, all right, that can work anytime, okay? But when we are talking about human being, you cannot, okay, formulate the behavior of human beings, okay? It's changing constantly. all right, especially if you are talking about, it's not even one person, we are talking about a group, market participant. So these are guidelines. That's why they say Elliott wave theory. It's a theory. Now, when we come to the reality of the messy market, all right, talking about the fundamentals, all right, the market leaders and the trading triangle that can influence other financial instruments, traders get confused because, okay, they think that everything should be always the same. It's none of that. And some traders can be disappointed about that because it's not always like this. So this is my first wave. Traders that are following us may say, George, you are repeating yourself too much. Great, that's a valid point. The reason I'm repeating myself is if you are a new trader watching our video for the first time, I want you also to know. But if you have been watching us, you know it already. So, okay, that's okay. I'm trying to label my wave count here. Use pink already, now use orange, okay? And then I'll use red here. Okay. And then the last one, have I got any option? I'll put green there, okay? So, now, I don't want to remove this. Okay, what we do now? So this is my first wave from here to here for Physia. Second wave from here to here. And the third wave, which is the longest wave. You see how long it went, beautiful. It went diagonal and then propelled itself in a vertical move, okay? Or a beautiful third wave. See that? Third wave. Nice. Beautiful. Followed by the fourth wave and a fifth wave. The fifth wave is ended here. I'm going to put a spotlight there. Pay attention carefully. If you are serious about area wave, concentrate. Don't let anyone disturb you. You can go to a quiet place and watch this video, okay? Total concentration. So the fifth wave has ended here. Now, the purpose of this video is to show traders how we can forecast, all right, the end of the fifth wave. So we are here, first wave, second wave, third wave, and fourth wave. Now we want to forecast where the fifth wave is likely to end. Repeat, likely, all right? Where we have there's a high chance that the fifth wave may end there, okay? That's what we are trying to focus because we want to have an edge. We want to, okay, be a little bit smarter than, okay, other market participants, so to speak, all right? How do we do that? We will join, okay, the high, repeat, we will join the high of the first wave and the high of the third wave. This is the high of the first wave, and this is the high of the third wave. We will join this point and this point, drawing a line there. I'm going to color this line now, which turquoise, in turquoise, okay? You see here? So because we were here when the fourth wave has ended and the fifth wave is underway, because the fifth wave is now underway, we want to know where we can take profits or where the fifth wave is likely to end. This point, the high of the first wave and the high of the third wave, will allow us to determine, okay, where the fifth wave is likely to end. So here, as the price coming to this point, you see some traders will take profit. Are you with me? All right, here, first candle touch it here. That's a smart place to start securing gains or taking profit or coming out of the market altogether. See the power of area wave trading? So you count the first wave, second wave, third wave, fourth wave. You can even have a bit of idea. Don't be arrogant, all right? Don't be arrogant. Or what do I mean by that? I mean, don't think that the price will definitely go there. Don't think that the price will definitely change direction there. The price may change direction before even reaching the target zone. These are guidelines, okay? Guidelines, all right? In this case, it's beautiful because to Physia, when you touch our target point, all right, the turquoise line, when a little bit above it, which is normal, the best scenario is to allow it. This is a nice signal though, because it went above it first, and then it closed below it, all right? but it went too far. This candle went too far. This is a monthly candle. It went too far. We will prefer this monthly candle to close somewhere here. All right, that will be better for us, and then we will sell, placing our stop loss above here. It went too far because why this candle is so fast? A lot of orders has been placed somewhere in this zone to sell. Traders who understand how to forecast the end of the fifth wave were observing what is happening here. So some aggressive sellers or some die-hard bearish traders, all right, so to speak, may place orders here to sell already as the price was going, to near the turquoise trailer here. This is a convergence signal, by the way, because the Elliott wave traders who are very smart, who know that this is the fifth wave underway, they will be willing to take profit right here, and the bear also will join them. So this is a convergence signal. The beauty or the gorgeousness, ladies and gentlemen, or the smartness, or how do I put this, all right, is that a convergence signal at a convergent point, one group of traders are exiting the trade, another group of traders are entering the trade. Those who have exited the trade are doing the same thing like those who are entering the trade. So the bulls that were exiting the trade here must sell. Now the bears that are entering the trade there must also sell. So it's just a beautiful, and you see, it went down nicely. Now, in a downtrend, how do we know that the downtrend it will end, or the bearish fifth wave will end? We'll do exactly the same thing. We'll join the low of the first wave and the low of the third wave to determine the end of the bearish fifth wave. You can see here we are in an uptrend. That's where we were joining the high of the first wave and the high of the third wave. But if we were in a downtrend, we will have joined, the low of the first wave and the low of the third wave, and then draw a trend line to join these 2 points to determine the end of the bearish fifth wave. Do you like this video? Okay, please share it and like it. Also, have any comment, put it below. All right, spread the news, because why am I doing this video? I want traders to know. As I said to you in this video, I do not hide anything when it comes to Elliott wave. I will share everything that I know about Elliott wave in the public place at 24elliottwave.com, youtube.com user /user/24elliottwave at 24elliottwave YouTube channel. I will share every information that I know about Elliott wave. Why? Because the more traders know about Elliott wave and understand the market principle, they will stop violating the market and forcing the market and distorting the market. In an orderly market, you know what's happened? Majority of market participants are rewarded. This is the type of market we want, We don't want a distorted market. We don't want a crazy market controlled by few, but a market that is enjoyed by the majority. All right, you see now, sometimes professionals hate retail traders. Why they hate them? All right, that's why they wait 30 minutes when New York is open. Why they wait 30 minutes when London is open? Why they wait 30 minutes when Tokyo is open? Why professionals wait 30 minutes when Hong Kong is open? Because they don't want some of the crazy market participants to mess up their trade. All right, they know that another market participant can make a smart trader lose. All right, so that's why we are busy day in, day out sharing these tips and tricks about wave trading strategies. All right, so we are encouraging traders to share our video and to like it, so majority of market participants may know this strategy. So that's how we can forecast, the end of the fifth wave. You may say to me, George, I know what you want to say now. I can close this video and go. I'm encouraging you to stay with me as we continue with this discussion. I have more information to provide for you relating to the fifth wave. So we have the line like this. What else do we need to pay attention to? Now, as I mentioned to traders in other videos, we know that during the first wave, we often see what we call a false divergence. Also, during the third wave, we also see what we call false divergence. So even if you see a divergence during the first wave and you are selling during the second wave, do not sell and forget. The same thing when you see a divergence during the third wave, at least allow the price to come out of the channel first. Otherwise, you will be selling like a donkey, all right? Which is not good, which means you are selling like a stupid trader. You see a divergence, you are trading the indicator, you are selling the indicator, and the price is displaying high lows, high high. All right? Do not sell like a donkey, all right? I've done it myself, and it's painful, all right? And later on, when you look back, you see, what? I've been selling all this time. And you feel ashamed because you see, how come, all right? Because you are trading the indicator instead of the price, okay? So the next thing we need to pay attention to, all right, during the fifth wave, so we know where it's likely to end. Another thing we need to pay attention to, though we see false divergences during the first and the third wave, we usually see a valid, okay, excellent bullish or bearish divergence during the fifth wave. So we will also be paying, here I'm using the commodity channel index period 30. There's nothing special about it. Okay, so we can see that the CCL period 30 on this monthly chart for Pufizia stock listed on the Dow 30, it has been going down, while you can see here, in fact, was going down for a long time, and while the price was going up here. If I highlight it now with a verticalize, highlight the fifth wave with a verticalize, you can see what I'm talking about here. All right, 1 second, please. Are you with me? Okay, let's build a better team of Elliott wave practitioners. I'm very passionate about Elliott wave, all right? And I want to, okay, communicate to you, okay, this passion also, but there is something else I need to say to you. Do not take it like a science. Do not be arrogant. Do not be too excited about it, all right? Just smile. That's all I want you to know, okay? So here we are. As you can see, we can see that my CCI was going down, while during the fifth wave, the price was going up. This is what we call a bearish divergence. This is a valid bearish divergence. But trader will say, Joe, when should I sell? Now we also know that we can forecast the end of the fifth wave by using the high of the first wave and the third wave. So as it's approaching this level, we are watching it. What's happening here? We can check the trading volume. All right. And then this is the setup. So you see that while they are selling, do not sell on a monthly chart like this. This is a setup. We'll apply the trading drill. All right, not the trading triangle, the trading drill, the setup, the signal, and the low risk entry point. Okay, that's how you will do it. All right. We will swing trade here. We can day trade every day, looking for opportunity to sell. So as the price hits this zone, we are busy day trading, and we don't want to buy anything. We're just looking for opportunity to sell. Now, as also you want to check Google Finance, you want to check Yahoo Finance, use the trading triangle, the market first, the sector before the individual financial instrument. Check the fundamental, check the market leaders, check the economy news relating to Pufizia. All right, is the market itself reaching also in the fifth wave? That would be great if the S&P 500 is also in the fifth wave like Pufizia. That would be beautiful for us. We will prefer that. We can be very excited about okay, this trading setup. Okay, are we having some bearish news? Okay, is the market afraid to buy more? Okay, at the end of this bullish fifth wave, what is the market sentiment? So we are doing some verification using the trading triangle. We want to check the economy news relating to the stock or the financial instrument that we are trading. We can apply this strategy for commodity, for forex, okay, for futures, all right, for ETFs, all right. So here we are. We can check also the time of the time of the year. Are we in the third quarter of the year? Are we in the second quarter of the year? What usually happens in May? In May, people usually sell. Are we in a selling period? What's the market? Sometimes you may see a setup, but if you start jumping into the trade at the wrong time, you can be in trouble. The timing is very important. While you are waiting for other market participants to see what you have seen, you don't want to be the first person forcing it. You want to be, all right, the person forcing it when it's entering the trade, when it's about to do exactly what you are expecting. So the next thing we will pay attention to, talking about the fifth wave, is to check, okay, a divergence. So I have some question at www.248wave, the trading test, all right, or trading knowledge. There I put some questions there for traders to check through. So in this video, I'm providing the correct answers to some of these questions. All right. So we know that, okay, so we see the fourth wave, okay, we draw the turquoise line, we say, there's a high chance that it will come here. We don't want to bet on it, we are just waiting. If you are buying during the fifth wave, as it's approaching this zone, this turquoise line, okay, we will take some profit or secure our gains. Now, we are thinking that the fifth wave is about to end. We are looking for opportunity to sell. Well, it can be messy sometimes, but some conservative traders, I will show you how they trade. They will draw, because you see this third wave is it went diagonal first before it went vertical, which makes it very difficult to draw. If I draw a trend line like this, you see how it goes to? It's not helpful, this trend line. So this trend line is not useful to me, so that's why I'm putting it like this now. You see, joining this point and this point instead of this point and this point, because if I put it like this, it's not going to be useful to me. Now I want to join. Normally I should have joined the second wave, okay, in this case the low of the second wave and the low of the fourth wave. That's what I want to do, because we are in an uptrend. If you were in a downtrend, I would have joined the high of the second wave and the high of the fourth wave. But because we are in the uptrend, I'm willing to join the low of the second wave and the low of the fourth wave. But because the third wave has been distorted a little bit, you see, it went vertical, went too fast, vertical, I can only join this point and this point. One can wait patiently, because now I can consider this as my channel. Are you with me? Are you following me? All right, you will follow me. Okay, you understand? I have a channel like this, you see? See the way the price move, that's why I'm drawing my channel like this. So if I don't want to participate in this move down that will break the bullish channel, the channel of the motive wave. The motive wave is formed of the first wave, second wave, third wave, fourth wave, and fifth wave. That's what we call the motive wave. Okay? So if I don't want to sell at the end of the fifth wave, or I am afraid to sell at the end of the fifth wave like this, because sometimes the price can continue to go up. If the stock is very bullish, you may count a 5 wave. If you start selling because you have counted 5 wave, you can be in trouble. The market can go up and go up, go up. The natural progression of the market is bullish. The market wants to go up. All right? So as the price, if you're afraid to sell here like this, or you want to sell and forget, wait until the price breaks below the channel of the motive wave and retest it. You see here? So it come out of this channel, the blue channel. See this channel here, okay, the blue channel that I've drawn now. Come out of it, you see? It come out first, and then it retest it quickly here. Okay, traders sold it. All right? Here, they sold it here on the edge, on the monthly chart. They sold it on the edge here. This trader have to go to the weekly chart to validate their setup, because the monthly candle was not closed when the price was touching it here. So you have to go to the weekly chart. All right? But then it went down all the way here to the next support level. This support, you see, went down. But you see, it went back again to retest the channel here again on the edge. And from that point, the correction has begun. So we can forecast, or we can determine, or we can have a bit of idea where the fifth wave is likely to end during the uptrend by joining the high of the first wave and the high of the third wave. This is the turquoise line here. If you were in a downtrend, we will have joined the low of the first wave and the low of the third wave to determine, okay, where the fifth wave is likely to end. This exercise, we will do it only when we see that the fifth wave is underway. Do not attempt to do this until you see that the fifth wave is underway. The next thing that we can use to validate this setup is to check whether we have a bearish divergence. Now, one thing I need to mention here, a stock will not go down if the fundamentals are solid. So, for instance, you are during the earnings season, this is the time where company will release their earnings to the markets. Do not try, okay, to place place a trade and forget. It's just crazy. Earnings season. So suppose we were here and we are expecting Pufizia to give us the market on earnings. Maybe the analysts give a bullish forecast that they will that this company is healthy. All right, you don't want to be chasing it and selling here. Wait until the news is released. All right, and if it happens to be bearish news, that is supporting also, all right, the technical setup in this case. On the other hand, if you want to buy and they have some earning news coming out, wait until the earning news is released if it's the earning season. If you happen to be bullish, that's great because you want to buy at the end of the bearish fifth wave. So the divergence does not mean sell by all means. You will use a multiple time frame trading method and support your technical setup with at least a few fundamental, at least check the market sentiment, what's happening with the market itself. Be more, okay, serious about your trading. Take it like professionals are doing. They will do their verification, they will check the news, they will check the fundamentals, all right? Some of them are pure technical traders, but there is another group of traders that are fundamental traders. They will tell them, look, be careful. Your mumbo jumbo technical trading, all right, though it's valid, wait, okay? So you want to combine the technical and the fundamental. This is the best approach for trading if you take it seriously. You will hear some Elliott wave practitioner will tell you that they only trade the wave pattern. It's true. But what they do not tell you is that they are not ignorant about the current market environment. They know what's happening in the market. Yes, they are technical traders. They trade the wave pattern, but they are also aware of what's happening in the market. All right? This is very, very important, okay? So this is how we can forecast, okay, the end of the fifth wave, either in the uptrend or in a downtrend. But if we do not want to sell at the end of the fifth wave, we will wait for the price to come out of the channel of the multi-wave and to retest it, and then we will use that as a setup. So we on the monthly chart, we retest it here, all right? We will check the higher time frame to validate this setup, and then we'll use the multiple time frame trading method to enter the trend. We don't want to forget the fundamentals, okay? We don't want to forget the trading triangle. The market leaders are very important. So for Dow Jones, okay, you want to check the market leaders. ExxonMobil is a market leaders, okay? Boeing is market leaders for Dow 30. You want to check what the market leaders themselves were doing at that point in time. Because if the market leaders are still bullish, all right, they can push the index up and they can influence other, okay, stocks that are listed in the same group. So you want to pay attention to that. That's what we are saying to you. The trading triangle. All right. It makes sense. It makes sense. All right. So you may say to me, Joe, you have used today stocks. How about currency? It is the same thing. Commodity, same thing. We are talking about the wave principle. Another thing I need to mention to you before you may say to me, George, I had enough. Usually there is the equality between the first wave and the fifth wave. What do I mean by that? Now, you have to see it from different angles. Now, some traders may disagree with me here. If the first wave, okay, moves like a $20, so suppose the first wave went from $10 to $20, or no, let's say instead from $10 to $30, that's from $10, okay, 10 to 30, that's a $20 move. So suppose from here to here, the stock move up $30. Now, the equality between the first wave and the fifth wave is that we will expect, because the first wave moves up $30 or $20 in this case, 2320. Oh my poor, should I drink something? All right, $20. All right, because the move, I'm not saying that this move here is $20. I'm saying if the first wave moves up $20, there's a high chance that the fifth wave will also moves up, okay, $20. Now some traders will say, Joe, this is beautiful. Yes, it is beautiful, but it's not a science. All right. Another thing you want to check is that I usually use, okay, like this. I will draw a line in the direction of the first wave. You see how I draw it from here? It's because the direction, the magnitude of the first wave from here, it went up to this level. I will draw a line like this, and I will project it here as the fifth wave is starting. But you can see that the fifth wave went vertical. It didn't go diagonal like the first wave. So this strategy here was not okay, useful to me here. Sometimes it will be useful. You can draw the line to measure the length of the first wave and project it at the end of the fourth wave. But you can see the direction of the first wave here is diagonal, but the direction of the fifth wave is almost okay, vertical. So that's what I say to you. You need to pay attention to that. But the key point when we are talking about equality, okay, equality between the first wave and the fifth wave. If the first wave moves up $20, we will expect the fifth wave to move up at least $20, okay, at least $20. But now, sometimes you will see it will be exact, and you will say to me, George, exactly. It is the first wave moved $20, the fifth wave also moved $20, and it didn't go up exactly. Sometimes you can see that. Sometimes you may not see it. The fifth wave will exceed, okay, the magnitude of the first wave. But what, okay, the wave principle is sharing with us, that sometimes you will see equality, talking about, okay, the magnitude, talking about the line that are drawn like this, and also talking about the dollar move of the first wave and the fifth wave. You will see similarity, all right, between the first wave and the fifth wave. So at this point in time, as we join these two quadrilateral lines joining the high of the first wave and the high of the third wave, and we are expecting the fifth wave to end here. We also know that there is usually equality between the first wave and the fifth wave. For that reason, we will also expect, here it wasn't a big move, we'll expect the fifth wave to move at least, okay, if this was $20 move, we'll expect the fifth wave to be at least $20 move. So if the $20 move ends somewhere here, we'll say, okay, there's a high chance that it will exceed it and come to the edge here. All we are doing is we are just mapping, okay, the chart. That's what we are doing. We are not trying to impose Elliott wave onto the market. The Elliott wave is the purest technical analysis. It allows us to map the chart like a Google map. So we can draw a line there and say, okay, this is a $20 move. So I will expect, okay, this stock minimum, okay, to achieve the same length like the first one. So I'll say $20 move ends here, but it did not reach the technical target level, which is the two-quad horizontal line. But all I want to know where traders are likely to react or to make a decision, because they know that there's an equality between the first wave, all right, and the fifth wave. As the price reach that level, I'm watching it. I monitor it. It allows me also to control my trade, to manage my trade, and to control the risk. That's all. The wave principle allows us to minimize our risks and to time our entry carefully so we do not fight the market and fight other market participants. The best Elliott wave practitioner do not fight other market participants. All right? Now you see the power of Elliott wave trading. All right? As I promised you, I did not hide anything, and I'm sharing it with you. So I encourage you also to share it. Sometimes in the past, you know, you go on the internet, you learn something new, and you don't want to tell your friends, all right? So because you want to have an edge, okay, you want to, or you are a student, I have some TSTWS SUA traders that told me that they were students, they are learning to trade, and one of them purchased the TSTW24, and he was very excited about it because it allowed him, okay, to make excellent decisions, which is great. So, but in this scenario, if you know something, you learn something, all right, it's powerful. When it comes to trading, if it's not confidential, this is very important for me. If you go around sharing confidential material, you get into trouble. All right? I mean, I've seen it. I've seen all the time traders do it, but I just laugh. Don't do it. Okay? In trading, we don't do it. These are few things some traders told me when I come into this messy market. You don't do it. Okay? If it says that it's not confidential, you can share it. Like this one I'm sharing with you here. It's not confidential. We are sharing in public place. All right? So share it. Don't be afraid to share it, okay? So you see now? Suppose you say to me, Joe, this is too much for me, all right? I just want to buy and sell, okay? So you say, okay, George, I understand what you have said, but I think Elliott wave is not for me. Okay. All we are saying is that if the price is going to go up, okay, if the price is in a rising channel, very often you see that the price, okay, will move up in 5, okay, waves. What do I mean by wave? I can say 5 moves. So the price going up, okay, like this, in a trending period, not a corrective period, you'll see that you go 1, okay, 2, all right, 3. Usually the third wave is the longest. 4, okay, and then 5 like this. Now, because we know that this is something that is taking place, as you can see here, this was 1, 2, 3, 4, 5. Can you see it? There are many stocks that have done exactly the same thing. 1, 2, 3, 4, 5. Another thing I need to mention here, for the strategy that I'm discussing with you here, we will prefer another condition that I need to highlight. This is what I said. I don't want to hide anything. That's why I remember now and will tell you. The third wave for this strategy that we are discussing in this second video about the power of the Elliott wave trading, the third wave should be the longest wave. All right? So everything else that I've said today about how we forecast the fifth wave, how do we determine the end of the fifth wave, one condition is that the third wave should be the longest wave. If the third wave is not the longest wave, this strategy is not recommendable. All right, you see here, the third wave was the longest wave. So whenever we see that the third wave is the longest wave, and we have seen that the fourth wave is completed, and the fifth wave is underway, we can apply this strategy. Now you see why I say to you, do not close the video and to watch the full length of the video, all right, as we continue. All right? So this condition is very important. The third wave should be the longest wave when we apply this strategy. Okay, very important. Now, I'm explaining to somebody who said to me, George, okay, I want you to make it simpler again for me. So the price going up during a trend will be in a rising channel, which is what we call a market pattern. There are 3 market patterns: the rising channel, the declining channel, and the horizontal channel. So 1, 2, 3, 4, 5. Okay. So when we count 1, 2, 3, 4, and the fifth wave is starting, we want to know where the fifth wave will end. will join the high of the first wave and the high of the third wave. For this strategy, the third wave should be the longest wave. If it's not the longest wave, this strategy is not recommendable. Okay? In a downtrend, if the price is trending again, the same thing we see, the price will go down in 5 moves. As it is still, okay, as the price still in a channel. It will, you see here? Not because this one went too long, and that's why you couldn't see it properly in the channel. That's why I draw my channel like this, okay? Now, because the second wave was too long, for 2 years or more. So here, I know that I will mention that in another video because I don't want the video to be too long. So again, if it's going to go down, okay, all right, it will come down, okay. First, it will come down in 5 moves again. And very often you see that the third move will be the longest, something like that, okay, and then the fourth wave follow by the fifth wave. But as we count 1, 2, 3, 4 waves, and we want to determine, okay, the end, okay, all right, is it my drawing good now or not? How about that's it, that's correct, okay? That's correct. So first wave, second wave, third wave, okay, fourth wave. As we count fourth wave, we want to determine the end of all right, the fifth wave. Because we are in a downtrend in this case, we will not join the high of the first wave and the high of the third wave. We will join instead the low, all right, of the low of the first wave, which is here, and the low of the third wave, to determine where the fifth wave is likely to end. Because we are in a downtrend, we'll join the low of the first wave and the low of the third wave to determine where the fifth wave is likely to end. But the third wave, in this case, should be the longest wave, and we will also check the divergence and see whether we'll see a valid divergence. As the price reaches the target zone, we will check the economy news and the fundamental, looking for a clear-cut signal. This is the setup. Always start with the trading dream, the setup, the signal, and low risk entry point. You can see this on a 4-hour chart. You break it down, okay, with the top-down trading method. Or you see the hourly chart, you can combine the hourly chart, the 30-minute, and the 10-minute chart. Break it down, break it down, break it down until you zoom into it on a lower time frame. Zoom, 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 all right, and have a low risk entry point. If the signal fails, just come out and run away with your money and come back again, okay? All right, you are a Zulu trader, okay? All right, I think I've said enough, okay? I hope you have learned something from this video also about how to determine, to focus the end of the fifth wave, okay, and to make excellent Elliott wave trading decision. We are the TSTWSYS008 traders. Until the next time, enjoy yourself and be very happy. Please feel free to share this video or to like it if you like it, or to dislike it if you don't like it, and to put your, if you dislike it, please put your comment below so we may improve, okay, our videos. I'll speak to you soon.